Welcome back to Module 3. In this video, we're going to look at stock picking. As you've probably guessed from our last video, there's a lot to consider and to analyse when picking a stock. Today, I'm going to cover the basics to help you get started. So what's the first step? Research. This is a lot more fun than it sounds. By researching, we mean looking at the metrics of different stocks and looking at the different sources of financial information. The first place to look for financial information is the daily news. My favourite sources are the Financial Times and the television channel CNBC. You'll notice that there are a few questions that are always asked when assessing a stock or a company. What is the company doing? Are they doing anything new? Have there been any deals going on, or do they have any big plans? What have their earnings been like? I would suggest following companies that interest you on social media and then follow their main competitors and peers. It's an easy way to keep up on a company's strategy and any trends in the overall sector. While this non-financial information is great, it's important to incorporate it with some solid financial metrics. This is where new investors can get a bit intimidated, but stay with it because all you really need to do is keep asking questions and stay curious. When you're deciding if you should buy or sell a stock, all the research you do will help make an informed decision. So let me show you how easy it is to get all this information and for free. Navigate to Yahoo Finance and just type in the name of a stock that you have an interest in. So today I'm thinking about one of my favourite companies, LVMH, also known as Moet Hennessy Louis Vuitton. They're a French multinational company and they make many luxury products that I already love. As you can see in the summary tab, there's lots of useful information. It's given me the historical price performance, the trading ranges for the stock. In particular, I like to look at the 12-month trading ranges, which shows me the highest and the lowest price the stock has traded at in the last 12 months. So I like this stock, but I'm waiting for it to be at a price point that I'm comfortable with buying, and I want to know when that will be. Is it currently trading close to a low point or a high point? Currently, it's mid-range. The historic price performance will help me work out a good entry point into the stock. It will also tell me who the competitors or peers are, and I can add these into the historic price performance chart to gauge which companies have performed better or worse. It gives me a list of buy or sell recommendations from different analysts. These recommendations tell me if the stock is expected to underperform or outperform compared to the wider market. In this case, the stock is performing better than the wider market and it looks like a good investment. However, it's important to remember that past performance isn't necessarily indicative of future performance, but it can give you more information about what has happened. When price performance dipped in the past, what factors were involved? All stocks will experience periods of volatility and drops in share price. But what's important and what I want to see in the historical performance is how they weather the storm and do they bounce back quickly. In this case, LVMH performed very well during the pandemic, so it seems like it might be a good buy even in times of recession. I'm also going to look at the PE ratio, which means price to earnings ratio. The PE tells you how much investors are paying for $1 of a company's earnings. This looks at what is the stock price today and divides that by the earnings per share over the past 12 months. A high PE ratio could mean that a company is potentially overvalued or that investors are expecting high growth rates in the future. It's important to compare the current PE ratio of a stock to its company peers so that you get the idea of a sector's expected growth. A lot of tech companies tend to have a high PE ratio, but it's worth learning more about a company and what their plans are before you buy. Again, it's a good idea to look at a competitor as part of an overall view and not in isolation. A low PE ratio might mean that a stock is undervalued. It could be a value stock, or there could be a very good reason that it has its current valuation. It's not a good or a bad thing. It just means we must do some more research. The next thing is to look at the dividend yield on the stock. The dividend yield, as you learned in Module 2, is the income that investors are receiving from the stock on a quarterly basis. The yield can vary by sector. More mature companies with stable revenue growth tend to pay dividend, whereas companies in an early growth phase may opt to reinvest that capital back into the business. If the yield is above 3 or 4%, it's worth asking why is it so high. The company may not have a solid growth strategy. They don't have anything that they're currently investing in or putting aside capital for, which raises the question about the source of their future growth and innovation. And vice versa, if the dividend yield is cut, there might be a cash flow issue in the company or a fall in sales. Finally, I'm going to look at the financial statements of the company. This is where you can spot trends that are happening in the company and assess its financial health in terms of assets and liabilities. I'm going to look at the balance sheet and find out what the company owns and what they owe. I'm going to pay close attention to the profit and loss account, and I can assess what's coming in, what's going out, and how fast the company is growing and what the profitability is like. Right now, we're assessing LVMH's metrics on a standalone basis, but you must look at comparative analysis as well. Never look at a single stock on its own. You need to look at it against its peers and the broader industry. So if I'm looking at luxury goods, rivals to LVMH, I'm going to look at Burberry, Hermes, Kerrang and Prada. I'm going to compare their metrics and decide which one is doing the best and looks like the best investment. Based on today's numbers, LVMH is still more of an attractive stock than Burberry. However, since diversification is so important, I'm going to spread my risk and buy both. So as you can see, research will really help you in the long run and make picking stocks and monitoring your portfolio a lot easier. Let me leave you with a few tips to remember. Follow the companies that you're interested in on social media and keep up to date with trends in their sector. Read the metrics and financial statements of companies that you follow to dig a little deeper and work out for yourself if they're worthwhile investing in or not. What is their unique selling point? And are they capable of growing their market share? Look at the historical price performance to work out when to execute a trade, the price to earnings ratio, which is calculated by dividing the current share price by the earnings per share for the past 12 months. Remember, there's no good or bad PE ratio. It's just a metric that tells you the amount the investors are willing to pay for $1 of a company's earnings. Also look at the dividend yield, which indicates how much income investors can collect from holding a share. Finally, look at the financial statements to assess consistency of a company's performance and their overall financial position, including their balance sheet and their profit and loss account. And most importantly, don't forget the golden rule. Keep diversification at the front of your mind and pick stocks you like across different sectors. Remember, past performance is not indicative of future performance, and you can still lose all or some of your money invested. In the next video, we'll be showing you how to build an overall portfolio. See you then.